venture capital. So with that, introducing the panel. Thank you so much, everybody.
Thank you. I guess I can take it from here. I'm just going to go and ask the panelists just introduce themselves really briefly, and I'll do it at the very end. Amy, do you want to start?
Sure. As Alan said, I'm Amy LaMeyer from the WXR Fund. We invest in female founders and diverse teams that are building using AR, VR, and AI.
Great, thanks. Evan?
Sure. So Evan Osheroff from Jefferies, and just one clarification, not a legal firm, we're an investment bank. And so primarily work with companies around strategic advisory. So that includes M&A, taking companies public, and helping companies raise capital, frankly, at all stages of the stack.
Okay, and Angelo?
I partner at HP Tech Ventures, invest in AR and VR companies, and even if the investment window doesn't line up, we'll also help some startups do some partnerships and introduce them to the right people at HP and other companies.
Great, and I'm Gerry Baranyano. I'm the director and founder of Tech Futures Group. We're a nonprofit that provides free business advice to tech companies. Our services are free. We don't take equity and we don't accept cash. We're funded by the federal government through the SBA, Small Business Administration, and also the state of California. If you're a tech company or startup, you can apply to Tech Futures Group. If we like what we see, we pair you with an entrepreneur in residence, serial entrepreneur that's had a good exit or two. They provide CEO level to CEO level advice, and then they bring in our specialty advisors if you need them, intellectual property, manufacturing, financial modeling, so you understand your business better and better prepared for pitches to VCs and angels. We help with that. And then we also help with government grants. We've been very successful. Been around since 2012, worked with over 600 companies. Our companies have raised about $1/3 billion. So thank you all. Let me just start then with Evan real quick. And we're all in this pandemic lockdown state. So I just want to ask sort of a short-term, long-term question. Short-term, do you see fundraising changes in terms of what people are looking for? Let's say short-term between now and a year from now, so mid-2021. And then long-term again, are there areas that you think people are going to start looking at from an acquisition perspective, long-term being till say mid-2000 or end of 2023? And then I'm going to go down and ask Amy and Angelo the same question.
Yeah, no, thanks, Gerry. I think the challenge has been, it's really been a world of kind of haves and have-nots, especially with kind of, COVID-19 pandemic. And what we've seen is a lot of companies that had raised capital beforehand. The plan was get them to 18 to 24 months of runway, whatever that took. And companies that were in a good position, there were a handful that could still go out and raise money or frankly didn't need to raise money right now. But anyone who was looking to raise money, frankly, in Q1 or Q2, it's been challenging. And it's been unfortunate to get a lot of calls and talk to a lot of people where the message has been, we don't think we can raise money. Do you think we can? And if not, we're just going to have to figure out either how to sell our business, sell our IP, or find everyone new jobs. And so I think short term, it's been challenging. But long term, I think it's extremely bullish. It's just a matter of getting through this hump. And I know there's been a lot of talk around, could this have been the moment? And I think, it's a moment and it's a good moment. I think, there's areas like collaboration that are huge right now that we've seen a lot of focus and a lot of interest from investors. And so it's been challenging in the short term, but I think it's going to be fine. And I think it'll be good in the long term.
Great. Amy?
Yeah, I'm going to agree with Evan there. A lot of the companies that we have been working with that were raising money, definitely there was a pause, but we're seeing an uptick in response in terms of investment at this point. Our space, fortunately, right, is less impacted than most due to the coronavirus, just because it's a virtual space, right? Everyone's using the word virtual more. We all, if we didn't know the word virtual before, everyone does now. And so, there's definitely more interest and the money's out there, right? The investment firms and funds raised in 2019. So there are definitely people that are looking for what is that innovation that's happening and going to come out of this downturn and how can they be a part of it? So I think ultimately good news.
Okay. Angelo?
agree with everything that's been said. And I've been counseling some people, if they can kind of float it. It's just like, you tried raising in Q4, early Q1 before this became apparent. If you haven't had any luck, stop spending your time on that. Batten down the hatches, particularly if you're pre-revenue and you weren't expecting to get a revenue anyway, and just try to come out of this on the other side and just kind of tread water, until October, November, and try to raise then. But don't kind of keep spending your energies, beating against that 35th or 45th or 55th VC. Just like stop and try to make progress on your product and revenue.
Yeah, that's actually the same advice we give our clients as well, is really focus on the other stuff. We also recommend reaching out to clients because a lot of them are home and bored, frankly. So it's actually a better time to reach out to clients than people think. Let me just follow up on something that Amy said. What are the innovations that you see happening due to what's going on with, virtualization or this, coronavirus lockdown where everybody's unfortunately on Zoom calls? So what innovations do you see coming up that piques your interest? And then we'll ask Evan and Angelo to think about that as well.
Yeah, so I mean, like you were saying before, definitely an uptick in remote work and productivity tools in virtual spaces. Healthcare, enterprise training was already picking up, and so was healthcare, but definitely seeing that continue as well. The entertainment space was hot in terms of gaming, and now the music and esports, that's going to continue to grow as we're quarantined and less physical for a while. So I think, and education that I didn't think would pick up very quickly, just because it takes a long time for education to adopt technology. We're seeing a little bit more interest in that space as well, which is great.
Great. Angelo, what about from HP's sort of corporate perspective?
A lot of the same things. I'm a little bit concerned about I'm thinking like, okay, what is going to stick, right? Let's fast forward 9-12 months. Let's say hopefully vaccine, we're on about, have a coffee, a blue bottle, etc. Are we going to want to do that virtual reality collaboration tool? Are we going to want to go back to that LBE place? So I'm, thinking of, it's all about the cash eventually. Like what is going to be around? I'm hoping we get this new normal and we're all playing Half-Life more and we're all doing design reviews in VR. But I'm also not sure how much of it is gonna, stay, right? Because the headsets are still heavy, or it still gives eye fatigue, or it still gives you a headache. And, there are all these things that I think are gonna revert, not all, many things will revert back just because, they've worked before. And I think a lot of stuff, sadly, may not stick in the VR world. And it's just gonna go back to, hey, I'm gonna have my iPad, right? And that's gonna be that halfway step, even if it's not as good. But it's a lot less cumbersome and it's a lot less disruptive and a lot less costly for people to adopt.
What I think is really exciting, and I kind of agree with you as well, Angelo, is that even though there'll be a shift back to real life, because we all naturally want to connect as humans, I do think that there's going to be an increase in development over this period of time because there's an increase in interest. And so I think this space will develop faster than it would have if we wouldn't have been stuck at home for a while, which is
absolutely
thrilling for somebody that's been watching this space for 4 years.
Two things that I think have been interesting on that point. One is, if you talk about just virtual in general, collaboration, whether it's education, whether it's enterprise training, the idea of being virtual, I think we've seen it happen and we've seen more. And I think if you just look at the platform we're using right now to have this conversation and the hundreds of millions of users that 3 months ago had never heard of Zoom, period. I think people also think about this transition happening fast, but you look at, there were organizations, people, parents, kids that had never heard of this platform. And that was a world where either no one was on video conferencing or they were on all video conferencing platforms. And so it happened, but we've now made the shift to just a better video conferencing platform. And so the shift to being truly virtual, having avatars, I think will continue to happen, but it takes a long time to get there. And so we'll see pieces of it. And then the other part that's been really, I think, beneficial, frankly, is, Jared, your point on the innovation, is that a lot of companies who I think had this type of idea or this plan or anything around this ecosystem on their roadmap has either been forced or has been fortunate to be forced to release and innovate faster and get this out now, when they maybe have this on the roadmap for later this year or next year, whether that's from existing clients who needed it or just something that, hey, if we get this out now, there's benefit. And that's actually been something that I've been happy to see.
It's, it's interesting. When I look at AR, VR, I remember a couple years ago in the Bay Area, they were saying, oh, conferences are going to go away. It's all going to be AR and VR. And I remember arguing, well, people are people. They need to, in Lyndon Johnson's favorite phrase, press the flesh. And I think that's true. To what degree is AR, VR sort of going to be limited by the need of people being people, as Amy said?
I think it's going to vary really by use case, right? So now, today, I don't really wear my North focals very often, right? But in 6 months, if I'm out and about and I want directions, I'll have a lot more use cases for that, right? Or an AR game, right? Like a Pokemon Go or something, or LBE. So I think some places are going to be helped and some places are going to be hurt by it when we go back to the new normal.
And then talk about just the idea of selling, whether that's software, hardware, whatever it is, right? The idea of selling, and how successful can you be selling a small contract versus a large contract, or things that you need to demo, whether it's in this forum versus being in person, right? And so there's a lot of give and take there in terms of what's the threshold for my ability to sell, whether it's consumer or enterprise, to someone else in a virtual environment.
And what is that? What's the limitation for selling in a virtual environment?
I don't think we have an answer for that yet, because there's such a bifurcation. It's mixed. No matter, like, anyone I talk to, I've heard great stories and I've heard terrible stories around that. I've heard this is the new normal. I've never been so efficient. I've never had so many conversations. And then I've had others where I know that there's no way I can close this transaction unless I am that last 10%. There has to be that in-person component. And it's one thing if you have an existing relationship with people, but if you didn't, how do you develop that rapport?
Yeah. So Amy, I want to get to you, but I just want to make one quick point. With Tech Futures Group, we do a lot of things by phone and virtual, by Zoom or whatever. But I always recommend to all my advisors, meet with your clients in person a minimum of one time. Make the effort to drive to wherever they are, meet in between, whatever, because I think that personal connection physically is really important.
Yeah, and I don't think that's going to go away either in business or in entertainment, right? In business, to be able to close a deal or truly connect and build that relationship, the face-to-face is going to be important. But what I do think will continue to stick, to use Angelo's terms, is our familiarity with using video, and hopefully the globalness that it brings, right? So hopefully all of these conferences that we're participating in now, I'd rather not that they're online all the time for now until the end of time. But if there is an online component so that more people can participate, that would be fantastic. And that goes for things like music festivals too, and artworks. Like, to the extent that we can use the virtual to include more people, but still keep the human component, I think that's the best of both worlds.
Yeah, I agree with that.
So what I found interesting when people talked about areas of use cases, what wasn't mentioned was e-commerce.
Oh yeah.
Why?
I think we need a big moment to happen with e-commerce. It's absolutely there. And I think about that in real estate and manufacturing and some other things too, is almost like second tier. But I'd love e-commerce to have the Travis Scott Fortnite moment of something really big that attracted a lot of people and showed that that e-commerce is the way to go, right? Like maybe it's Fashion Week that's coming up, I think. So like maybe that'll be the thing that suddenly we realize that e-commerce can lean in.
But this should be the best time for e-commerce.
I thought it has had a huge jump, hasn't it? Sorry,
Yeah.
go ahead.
There are definitely companies like Obsess AR that are leaning in there, but to a certain extent, I haven't seen a differentiation between now and pre-pandemic in a lot of the e-commerce sites use cases, right?
I mean, I think every e-commerce player has at least an individual, either who's heading it up or is focused on, app integration, whatever it is, whether it's, the ability to try stuff on, place it in your room. Most companies have something there. But I think when you get to who the users are and who the purchasers are, that's, I think, where you kind of have that challenge, right? There's a core demographic that can use that. But to Amy's point around kind of a Travis Scott moment, it's, if you look at the broad user base of commerce, right? It's, people I think are a ways off from downloading and using and getting comfort around kind of an AR enabled app. And so there's definitely a pocket of that, but I think it needs something big, whether it's, the next generation phone, whether it's headsets, to enable a mass, opportunity.
So what you're talking about when you say e-commerce in that sense, you're talking about someone trying something on and seeing what it looks like in an AR, VR world, and then saying, yeah, that looks better than that other, item that I was looking at. Is that what you mean?
Yeah, I think commerce in general. I mean, I think, whether you're going to, think about today, right? Like, what's the VR opportunity if I'm going to go buy a barbecue? Right? It's, for summertime coming up, right? That's not there yet. Whereas I can pretty easily place a couch and arrange different items in my room to decorate.
Okay. And I guess maybe the first step is M-Tailor, where you stand in front of your phone or iPad or whatever it is, and they take your measurements, and then they make your shirt or pair of pants or whatever it is you're buying. Is that sort of the first step? And then after that, you start getting more the augmented, reality type of stuff, or how do you see that developing? And it's not just Evan, it can be anybody else can jump in here.
I think a lot of it's also the technology, right? The idea of having extremely high def spatial resolution, the ability to measure, capture, right? There's so many little micro pieces that I think you need from a tech perspective to make those use cases really explode. There's use cases today of it, obviously, and there's people that are taking advantage of it. But to make it mass market, I think the tech is still a ways out.
Yeah, I just think it's a little earlier. There are definitely companies like Ventana and several others that are doing 3D asset creation so that you can see all of the items that you would buy in 3 dimensions. A little bit of me thinks about it like, do you remember when we were moving from websites to smartphones? There was that moment where everybody was doing a mobile web app and then eventually, or mobile website, and then eventually it was a web app. Like eventually we'll see that with virtual and augmented reality too, but it's a little bit contingent to your point on like hardware and how we're consuming it. Mobile is the easiest today.
Yeah, for sure. So
let's go into that. What are the technology or technical innovations that are required, not just for e-commerce, but to get this AR VR world really goosed forward? So I think before we got on, Amy had mentioned 5G, and so we chat about that. But what other technical or technology innovations are required for that?
I think the hardware form factor is going to be one, right? You have Nreal and North, you have Mojo Vision, which is years away, right? You've Apple, who knows, right? But holding up your phone and eating up your battery life, which I've done because I like to practice, this is kind of annoying and bizarre, right? Then there's going to be the social issues, right? Of having a camera, outward facing. Are we going to have that? Are we going to have some kind of image sensor instead? So we'll see what we get used to, right? We've gotten used to a lot of things in terms of privacy over the last 20 years.
And where do you see that hardware evolving? What aspect do you think needs to be, other than size and comfort and that kind of thing?
I think it's okay just having not having a true, from a consumer perspective. Yeah, it'd be lovely to have a light field and 3-dimensionality, but I'm not an architect or designer, so I really don't need to have that. I think just something super simple, right? Just like a text with directions or the ratings, that's super functional, right? Like, what's the weather? How do I get someplace? So I think we're literally almost there, right? With some of these devices. And I think the killer app is just normally, like, oh, I come out of a building. Which way? I'm turned around. I just came out of the subway. How do I get there without fumbling at my phone and looking at the directions? And, it seems like a trivial thing, but if I can save a minute, if I can dictate a text message to Amy or to my wife or to my children, it's like, wow, like this is so much better than having to fidget with my pocket, right? And take something out. I mean, I've been around enough, right? I remember I used to have to like boot up my computer, right? I was like, oh, that was a pain. Or I didn't have a capacitive touch screen. Like it's like these are like aha moments.
What does boot up mean?
The thing I say a lot is be ready for the mass market when we have cost, content, and comfort. And all of those things are being taken care of. And comfort in particular, Angelo, you pointed on this, it has to be easy to use. And so comfort is not only, how comfortable is it to wear? Is it heavy and are you holding up your hand? But also how easy is it to interact? And so I think it will be a staged process, like Angelo was mentioning, with the easiest things first.
What about the stuff that people are doing with the new cars with everything up on the screen? Is that app or whatever, a use case that's going to get people really, really comfortable because they're using it every day? I think Evan had mentioned that, people being on Zoom, just the level of comfort everybody has with this technology is going to shift their mindset going forward to say, why don't we do a Zoom call rather than, or webinar, whatever it is, but rather than do an in-person visit. Is the auto going to play a role or not? I mean, I get a lot of blank stares, so I guess I know the answer to that.
Are you talking about buying a car or using and driving a car?
No, in the use of driving it, where it's on your screen, so you can see the map and that kind of thing.
Whether people realize it, there's been augmented reality, right? Lightweight holography, call it, in automobiles for probably a decade at this point.
Right.
In some way, shape, or form. And there's you have touch screens, you have the interactivity, you have the touchpad. So there's a lot of technology, but I think there's a huge amount of investment coming from the auto manufacturers around what we would call augmented reality. They just focus, it's just their next generation heads-up display.
Right.
And that whether that's traffic, GPS, notifications, your dashboard. And so there's a lot of that already out there in development, but I don't think we as consumers of XR technology are going to perceive it as AR. And so I don't think that's necessarily going to translate into using it for commerce or using it for collaboration at work. I think it's one of those things that's so seamless. People don't think of it as that type of a technology. It's just what's there.
Okay. All right. Any comments from Angelo or Amy about that?
I mean, I think we're all going to have a personal XR device with us, right? So if you might go to a store and see a hologram or a light field, or go to a car or go on a bus, and there's going to be this stuff around you that's whatever, infographics or information advertisement. But I think with 5G or whatever, we are going to have pretty much personal devices, and that's going to be the primary avenue or on-road for XR.
Particularly as people buy fewer vehicles and as we move towards autonomous vehicles. I even now, and I listen to my music off of my phone, Waze is off my phone. I don't actually use the car interface, but if my phone interfaced in a more visually augmented way, I would use it, or augmented audio, that would be useful.
Okay. I always like to look at surprises. So what use case in this field, AR, VR, area, what use case surprised you in terms of its market acceptance? And what use case would you like, or are surprised it didn't happen, or you would like to see and for some reason it's not taking off?
I was, so this is like, where was I wrong? I've been wrong so many places, but I was wrong around LBE, right? I did a bunch of mystery shopping. I was like, this doesn't make any sense. It's so expensive. Whatever household doesn't have more than $100,000, they're not going to blow, $100 for a family of four for 20 minutes. But then a couple of companies, pre-pandemic really did a nice job, right? And it was, who they were targeting with what kind of material, great operations. So I was just like, wow, like happy to be proven wrong, right? So that was a pleasant surprise for me. I'll stop there and then let others go about where they were wrong and then what we hope for maybe.
I was
Pleasantly
going to
wrong.
say the exact same area, particularly with LB as it pertains to Asia and the uptake there.
Right.
Yeah.
Contrarian view, Amy?
Amy's smarter than us, so, or at least she's smarter than me. So, she has to really dig deep about like, what was I wrong about?
Not particularly contrarian, but different, I suppose. I was surprised about the success of Beat Saber. It was huge and it was fun. Don't get me wrong, and is fun. Just surprised at how well it did, and pleasantly surprised. So that was really great. The other thing that's just tangential to your question, but I think it's really interesting, is the other day, or maybe a month ago, maybe longer, what's time? There was a post about augmented reality, and someone had posted about the boxes in airports and how you measure your suitcase in those boxes. I thought, okay, that's a thing that won't need to exist anymore. And so the concept to me, it was kind of an aha moment of augmented reality will replace things physically that don't need to exist. So they don't need to be made, they don't need to take up space, and they don't need to be thrown away. And I'm kind of loving that and leaning into that idea, which was a little bit of that benefit was a surprise to me.
Was that a case of where you expected something to happen and it didn't happen, or you see it happening in the future?
I didn't realize that there would be an environmental benefit to having augmented reality, because physical things wouldn't have to be made or thrown away or even take up space. I've thought of a couple other ideas since then of what that is, but just to the extent where physical things don't need to exist because we can do them digitally. And so I've been interested in digging into that use case for a while. So
I think it's a very interesting use case. Evan, do you want to add anything?
It's probably not as concrete as Amy's example, but I think what I've been surprised by has been, frankly, the amount of ways to engage with the medium through whether it's hardware, software, mobile devices, tether devices that have been sustained, that haven't just disappeared, especially if you look back over kind of a 10-year horizon. There's been, and that pace of innovation has only accelerated. And so, to me at least, it's an incredibly bullish signal, especially when I look at something like autonomous vehicles. Maybe it's the capital intensity, but there's so many fewer companies focused on that than there are on this technology. And there's still a huge amount of investment required here. And so that's been something that I've been continuously, I think, surprised by.
All right,
All right. Hey,
great.
Thank you so much. This has been amazing. I know, Angelo, you mentioned the North glasses. I figured I'd put them on here. And then, you've got things like the Bose glasses. Somebody today had these on without the sunglasses, but they had them on as an audio. They were just having a meeting with us. I said, are those are the Bose glasses? As all of these technologies kind of miniaturize, you've got the Quest on the desk, you've got the Magic Leap, we've got all of these things at our disposal. There's some questions coming up here specific around investment. So I'd love to just ask you guys the questions. First one here is, what are the key aspects you look for when investing in XR companies? You kind of addressed that a lot, but let's go around the circle here.
Don't do XR for XR's sake. So please, I hope you're coming from the industry and you're solving the problem. And whether you're doing that in AR or VR, a tablet, that's kind of should be your attitude. Because a lot of times I feel like, I love XR. Don't get me wrong. But in order to get out of kind of like just a cool thing that might get $100,000 little project from some big company, you've really got to kind of prove the ROI for the product line manager who's got to make the decision like, yes, this is going to help train my sales force. Yes, this is going to help me do a surgery better. So really just think about the problem and then think, how am I going to solve this?
I love that. So really activating on your core strengths. So if you're in an oil and gas company, you happen to see this technology, how can you use this in your, or medical, or I love that. Finding a solution to a problem using the tech rather than the tech for tech's sake. What about yourself, Evan? What would you recommend?
As less of an investor, I'd say the things that we usually face challenge are, obviously what Angelo said, right? You have to be solving a problem. You have to know who your target audience is, and you have to know who you're selling to.
Yeah, it's vital.
You also have to have
too many times you have startups. What is your key customer, and they can't tell you. So that's important. What about you, Amy?
Yeah. Also, is it the right time, right? Like if you're building right now for smart glasses, may or may not be the right time to do that. So just kind of looking at the market and the hardware, the whole ecosystem to see is now the right time. We're in an emerging technology, and so things are going to be changing a lot in the next decade.
Agreed. And Gerry, any?
I think I just want to echo something that was said. Our experience with the many tech companies in this field and in others is that the biggest difficulty they have is getting early traction. And so you really have to know who your client is, what their decision-making process is if it's a big company, and you also have to know, what the value prop is, and most don't. And so we spend a lot of time trying to emphasize that.
That's very, very true. Okay, I have a couple more questions. Are you okay for time? The next portion after this is a break anyway, so as long as you guys are okay for time, we'll try to answer all these questions, yeah? So the second question was, first of all, it said, great panel, investors. Question, does a company being in development and having a low burn rate make them more attractive to invest right now? So we'll start, we'll go the other way. Amy, maybe we'll go counterclockwise on my screen. Amy, we'll start with you. Does having a low burn rate make it more attractive? I
would definitely say knowing how to manage your expenses is always attractive.
Good financials never hurt. I think we'll just leave it at that because, being able to, I read somewhere, I was on either Andreessen blog or something, but the number one metric for any startup, especially pre-revenue, is cash in the bank. So if you have cash in the bank, you can measure how many days you have left, or months, or weeks, whatever it may be. That is your only measure of you should be looking at. So, okay, scrolling down here. You kind of already touched on this, but where do you see the most investment interest? Hardware or software? Consumer or enterprise? And how do you segment the market fit as you look at new companies? So maybe we'll start with Gerry. Is it Gerry or Gerry? I'm sorry.
Gerry. We work with companies that are in pretty much all parts of this area. So we've done, film production with AR, e-commerce, healthcare, construction, education, gaming. I'm going to punt, partly because I have to be careful my position, but let me punt on that.
Absolutely.
I look at each individual investment on its own merits, then I construct my portfolio, right? So if I've already done 2 software, commercial VR training applications, the bar for that third one is really hard, right? Because of my beta and my risk. That's kind of how I look at it, right? I'm not some macroeconomic analyst trying to piece the world together. I'm just like, I'm placing bets, and at a certain point, I don't want to kind of place all the bets that are going to kind of correlate with each other.
Actually, on that. Sorry, I just wanted to ask a quick question on that. When you mentioned making bets, now in the VC world, it seems to be that a 10x return is kind of the this is the gold standard, the minimum where you want to get to with your portfolio. Making bets in a similar thing, you're almost betting against yourself by saying, okay, we believe you're going to be number one, but we're betting in the same thing that your competitor here is going to be number one too. Do you ever bet in competitive?
We would
Got it.
typically not do direct competitor. We typically would not do direct competitors, right? But there are industries that relate to each other. So let's say, hey, a VR training in healthcare and a VR training in whatever, education. Well, they could end up pivoting and competing with each other, but also those things are going to be broadly affected by the same macroeconomic factors, right? Like the hardware didn't come out or it did come out. 5G is introduced or not introduced. So that's why you just kind of think, like, what do you have to believe in order for this to become a unicorn? And if some of the same things start lining up exactly, obviously they're individual company ones, then you start like, wait, like I'm too at the mercy of factors I cannot control. I hope that clarifies.
Understood. Absolutely. Amy, sorry, you were going to go. I apologize for cutting you off. The question was, where do you see the investment interest, hardware, software, consumer, enterprise, and how do you segment the market fit?
Yeah, so it's unique to, I think, every investor. And so I was just saying that Martina and I, neither of us have experience in hardware, so we don't tend to invest in the hardware space. So we'll lean on the software side.
Amazing.
But hardware is key, so people, please invest in hardware because we need to consume the software. So yeah.
All right. 1 second, guys. Here we go. This is a good question. Are investors willing today to invest in post-COVID startups, given the large number that pivoted to working in the current situation?
Totally.
So I'm not.
Otherwise, I'd quit my job.
I don't understand that question. I think the answer to that is VC is open for business. You guys have money. You need to invest. Actually,
absolutely, but the market's going to be down, right? I would give 10-1 odds. There are going to be fewer deals this quarter, fewer dollars invested. Hey, it's increased economic uncertainty. If someone's betting the exact same amount, they're not paying attention to like the risk that's under. They're not paying attention to the discount rate that they should be applying to their investments.
Actually, it's interesting. I advised some family offices, and what the question came up the other day was, with VC investment. Being, typically of a large endowment fund would be, between 2 and 7%, depending on the fund. But now, as these large endowment funds are pulling out of the stock market and reallocating from, real estate to this, there's a rejigging going on, which may overbalance their VC investments because VC is actually doing well. Tech is doing well in a otherwise. So, are you seeing from a VC, you're going out to raise money? Obviously, HP, you already raised, it's a corporate fund, so it's a little different. But when, other venture capital firms are going out to raise money, that could have a trickle down effect on the amount of dry capital available to those funds.
I actually think it's going to be a negative, right? Because people get nervous and they're over allocated to their VC portfolio, right? So it's an illiquid asset that it tends to be a higher risk. Oh, yeah. Sorry, I thought you were arguing the opposite. No, absolutely.
No. They're going to pull back out of VC because it's illiquid.
Not an issue for us, but I've seen it firsthand among some of my friends.
So the answer to that is venture capital firms that have raised capital post or pre-COVID, and the ones who are looking to raise those funds, it may get more difficult as large investors reallocate funds. So.
Yeah, and I think even some if you're not a top tier firm, even pre-COVID, right? Some of your LPs are going to be like, well, there's a macroeconomic clause. I'm actually not going to, I'm going to you're going to have to really pull teeth to draw out that last couple $1 million of capital commitment from me.
I agree. Yeah, and are you seeing valuations that were pre-COVID dropping in, things that you're seeing are entrepreneurs coming to you and saying, hey, we were worth 10 million here, now we're worth 5 million. Is that a thing? Or entrepreneurs discount?
I think, look, I'm not an investor, so I'll take that. What we're seeing, what I have heard continuously is that an entrepreneur thinks they're worth, what they're worth, and part of it is you wouldn't be a good entrepreneur if you didn't think you were worth a lot, and so. We're not hearing companies say, if I was worth 10 million before, I'm okay taking 5 million today. I think that's something that's going to be more forced upon them, and it goes again to the best companies will be able to achieve those outsized valuations. But for the most part, there will be fewer deals. There'll be a higher bar to get that money, and valuations on the whole will be down and have been down so far.
How long? For how long will that happen?
I actually kind of to Angelo's point around hunkering down with cash. I think at least until Q3, Q4.
Of this year?
At least, yeah. I think that's a whole year thing.
How does the Fed printing close to 4 trillion now, maybe 5 trillion? I don't know what the number is now. How does that affect the liquidity of the markets of the investors? Like, there's a lot of money that just got put into the market.
If you believe the stock market, it doesn't matter.
I would agree. Like it's not going. The people who are investing in VC funds are, not lining up for the $1,200 checks, right? They don't need it. But to my earlier point, right, they're looking at their portfolios and they're nervous and they're just gonna pull back and be gun shy. And to Evan's point, the bar has just gotten a lot higher. Yeah. And I think there is going to be downward pressure on the valuations. Sorry, go ahead, Amy.
No, it's great.
Go ahead.
Please, Amy, go ahead. Please.
I was going to say whether there's money or not, there's a sense of risk and uncertainty right now. And the longer we're in this period, the less uncertain it might get, right? Like there might be a level of comfort that returns. And so, Q3, Q4, I don't think is a crazy estimate. But it's just around the corner.
It's right here.
Yeah, I mean, start pitching now, people. Speaking of which, we have an amazing lineup coming this afternoon of startups that are going to be pitching, and it's really, really exciting. We'll get to that. I had a very specific question here. They're interested in learning more about Tech Futures Group, and they're working on an SBIR application. Is that something that TFG could help them with?
Absolutely. So we have 2 SBIR experts. One does a lot of NSF, NIH, National Institute of Health, National Science Foundation, some of the smaller agencies. And then we have one who knows pretty much everything there is to know about DoD and related agencies like NASA. So we've been extremely successful. The hit rate in California for all SBIRs, not Tech Futures Group, but everything, is about 15%, 15%. We're at over 40. So our SBIR applicants get funded almost 1 in 2.
Wow, fantastic! So that's a fantastic resource, and I believe that was Devin Copley. Next question.
So that just real quick. So those are non-dilutive funds. So these are grants. They don't have to be paid back. They're non-dilutive funds. So they're great for startups, for VCs, for everybody.
Yeah, and I think that's another thing. Actually, a question leading into Amy, and actually all of you. What are you doing to help your startups that you're in your current portfolio or ones you're advising? What are you doing to help them leverage this new minted capital that could help them through grants and other things? Do you have a program or do you have a system? Maybe HP has a whole grant writing team. Does that do you help these startups with these types of things? Because it helps everybody at the end of the day. Cash is cash.
We haven't really pushed our portfolio companies to take advantage of it. Some of them have, but most of them haven't. I think that kind of the direction, right, and the intent was to help smaller businesses that are not VC funded. So we haven't actively pushed people towards doing it.
Got it. But there are other. Sorry.
Go ahead. We met with all of our portfolio companies as soon as shelter in place began and just went through their plans and helped to adjust their budgets.
Great.
And then we did some calls. We have had 26 companies go through the accelerator. And so we just did some Q&A type calls for them and answered questions that they had. So
wonderful. This is, and these are the resources that, again, I guess, the Tech Futures Group, you guys are providing that as well. So it's, for those companies that aren't lucky enough to have the support of WXR and HP Ventures and Jefferies, Tech Futures Group is really there for you. What's the website? Is techfutures.org, correct?
Correct. Techfuturesgroup.org.
Techfuturesgroup.org. All right. We have a couple more questions. Are you guys okay?
For 5 more minutes, then I should go because we have to judge the next thing.
Perfect. 5 more minutes. I think we're on track. Let's see here. The next thing is perfect. Yeah, we're right on track. Okay. So now I lost my window. Where did you guys go? There you are. Sorry about that. Next question is, last question. Okay. With Apple launching eyeglasses, how is that going to affect AR development industry? I'm actually not going to take that because we don't know that Apple's doing that. Let's stop that. How do you approach investing in non-US startups with demonstrable product market fit? Or do you?
There are smart, wonderful people in all corners of the world. Whether you're US or not really has an extremely marginal impact. Sure, it's nice to be able to like drive over and meet for a coffee or a drink, but it's by no means a prerequisite. Like,
Very well said.
Yep.
Amy?
I agree.
Yeah. I can say that we're all global here. Speaking of which, we're gonna take a 5-minute bio break, and we'll come back and we'll judge these startups. And yeah, this is going to be an amazing afternoon. Thank you guys so much.
cool. Thank you, guys.
Thank you.
Take care.
Thanks, Gerry.
Bye.
Evan.
Yes.
Thank you.